The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both of Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Yeah, well, hey, listen, that right there, folks, let me tell you something. That is a light bulb. Now, picture this. That's probably the first light bulb that I've had go off in 2 or 3 years, so thank you. That's
So what I do in the Master Trader course, the way that we set things up was I wanted my students, to become masters of the C to D leg.
Yes.
So if you can master the C to D leg, then you're home free.
Yeah. Yeah, you are.
And so they got it. You know, as all of a sudden some light bulbs went out.
That is so cool.
Ooh.
That's a beautiful thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien, Thomas Edison. Get those light bulbs out there, folks. We love you growling and prowling out here with us. Right now, you get the Dow down 6, NASDAQ's up 2. You get the gold contract flat. You have silver up 32 cents. Bonds are down 9 ticks. We get King Dollar off 20. And, bottom line, we get the Fed meeting minutes from June 20th coming out at 2 o'clock. And, we'll see where the Fed... what they have to say, but bottom line is they expect, lower price. We're flat markets now, but, lower. What's interesting is that what happens, when lower price comes at you out of nowhere, and that's what really happened yesterday in many of the equities.
Yes.
Do you know what I mean?
Yes,
Companies got crushed. I mean, Cummins got crushed.
Yes, yeah. They did.
Q-Core
or whatever.
Q-Core. That
or one of them.
Both of those got crushed intraday, folks, by about 15%. When you see that, that is a big heads up what is basically coming, okay? Because when you get whacked in the side of the head.
Phase.
Yeah,
you get
exactly.
big part of the markdown phase. And they're just marking them down one at a time.
Marking them in intraday.
Yeah.
So if you don't have a stop in there, folks, get stops in there. Because I'm telling you, you look at a couple of these equities, and, bottom line. Hey, yesterday morning, first thing you asked me about IBM, right?
Oh, absolutely. In fact,
seriously, IBM, folks, when we were talking, was at 190 yesterday, okay?
Yeah.
Hey, we were saying, hey, that gap's wide open. Well, guess what? It closed at 186, okay?
Yeah.
And it's going after the gap. But IBM broke the swing point, broke it with volume, so it's an ABC down. You got 179.
If it didn't have that gap and that volume right there, I'd be short of an IBM this morning.
Yeah, right.
But it's got that sitting right there, so it might hold it. But
it'll hold it temporarily. Yeah. And you get another bounce out of it, and you can shot the heck out of it. Because watch this, when you put this on a monthly, IBM is screaming.
Well, I know where you're going because I remember that breakout.
I know,
and it
man.
goes back. I know, because I heard you on the radio yesterday, and you were like, oh, man, look at that. And I remember that $116 breakout area
what was that
on the daily chart.
Exactly.
I remember that gap up and everything.
Well, when I was talking about, folks, in the afternoon show yesterday, I don't know if someone called or not. But
I think, Well, I don't remember. You might have just looked at the stock chart.
Because in the morning, what would end up happening is that we didn't go that far. I was like, we got 157 out there.
Yes.
And then what happened, folks, I brought the whole thing back, to 2000 in the afternoon. It's like, whoa, hold it, man.
Yeah.
We're in... Well, this is how it works.
Because that, folks, has because they're the number one weighting inside the Dow.
Yeah.
When you see that out there, you can say, "Wow."
The ramification's huge.
Yeah, because when when you have the leaders when they lead you on the way up, they also lead you on the way down.
Oh yeah, then they start dumping it. Forget it. And what does happen in a correlation is that if that gets dumped, I get the question yesterday about. The chicken and the egg with the ETF structure versus the indices, okay? Well, what happens is that if they dump an IBM, they got to dump the DIA.
Right.
They dump in the DIA, you got to dump IBM. So that correlation is direct.
That's right. It's part of that. That's where you had the issues going back to the mark to market. So when you were taking a look at the derivatives out there, so when you're back in the 2008 time frame, they had this mark-to-market. They knew that this was going to be coming into effect. I think it was like in August or October of 2007 when it was going to finally start, when they had to mark things to market.
Right.
And then what happens is you start with that cascading effect.
Big time.
And so each time that you've got a mark-to-market on the way down, it just really created that momentum.
Yeah.
That's why they wanted to get rid of that and shift that.
Oh, yeah.
In an orderly market and just simply the fair value of assets, you want to mark things to market.
Well, except the banks. They want to mark them to magic. Mark to magic is the bank's mantra, folks, okay? No two ways about it. Now, yesterday we were talking about PFG Best.
Yeah,
okay?
right, yes,
the broker
yeah.
dealer firm.
Yes.
So if you look at the front page of the Wall Street Journal today, they finally picked it up. It's on the front page today.
Yes.
Now, the information they had in there, though, was pretty cool to understand why it happened at this particular point. Because there's a couple things that I never knew how the future really works.
Well, what was going on under the covers, too, what the regulators were doing.
That's right.
Because we're taking a look at stuff and saying, you got to be kidding me.
Yes,
exactly.
How
can this happen?
How can it happen? So what happens in the futures market, folks, is this. So in the futures market, their regulators, they actually were looking month to month, do these folks have enough money? Well, until MF Global blew up, they allowed the brokerage, the future brokerage, to give them paper statements, paper bank statements.
Right.
They changed that when MF Global blew up 5 months ago. That is how they moved into PFG Best.
Yeah.
Bottom line is that now they're right into the bank accounts electronically, checking it out. So the bottom line is that, the regulator did get pushed to shove, and then what they realized is that I'm sure they were already closing in on them.
Yeah,
and
for sure.
that was the essence of it.
Which is very cool to know that if that's what's going on, and so, they've got access to the bank accounts and they can start to tie stuff together.
It's great to know.
Then
because
that creates a little bit more certainty.
No, it absolutely does. What it does is that, if there's any other blow-ups, they're going to be probably within the next 30 or 60 days.
Yeah.
Because, see, if they change the whole system, how that works, well, here, they're going in right now. So,
and having that in there, you would think that that opens up the door for the potential insurance side of it to come in.
Yeah, it does.
Okay, because you've got more, you should have more control. Because then the risk is
only 30 days.
Yeah.
Right? In between,
that's right.
In between where regulators are coming in. Now, the neat thing about it, about how they're doing it now, is that is something that can be systematic inside the process.
Yes. Exactly.
Because why couldn't, there is no reason that once you get it set up, so watch this, folks, once the setup is actually done, that you get the regulator here, you get the bank account here, just like, the first thing I do every morning when I wake up is I'm checking all my accounts.
Right.
That's right. And folks, you should check your accounts.
Especially in today's day and age.
We're in a credit market. Do you know what I mean? If someone has your credit cards, and,
That's right.
you absolutely should check them.
That's right.
So, they could check that every day.
That's right.
You could get it. Why not?
Yeah, exactly.
Why not?
To see if that's right. They should just simply set things up electronically, just to understand if there's any unusual transactions going on.
Totally, no doubt.
So that's cool.
It is. No, it absolutely is cool. No doubt about it. Europe this morning, you had flat markets out here. It's going to be. It looks to me, the DAX can't move, or rather the FTSE can't move. The DAX, I think, is going to be the number again, because the DAX has given us the best signals, right?
It really has been. What I like about the DAX chart is that as the market was moving up into July 5th, you actually had the DAX get back inside that long term.
Oh yeah.
Tested it and then got back inside it, and it failed and came back out. And so all that it's really doing yesterday and today is going back up and testing it again.
Okay, so let's talk about this, because this is a huge deal. What Steve has up here, that's a long-term channel.
Yeah, it goes back into our August lows. This happens to be their September of 2011 lows.
Okay, cool.
So when that's where this channel, because that's really our last move up.
No, big time.
And in fact, back in the August and October area, that's where folks that really understood your tick and trend,
right,
understood that there were some real lows that were put in there.
Yes.
Not that they won't be taken out, but there were some. There were some good bottoms that were put in there. So the DAX has the same kind of setup.
And folks, what happens is this: you can learn more, and the market gives you more information from failures than anything.
It does, absolutely.
And that's what Steve's talking about. It got back inside there, and you could go, hallelujah, man, we're going.
That's right.
And
that's what it looked like.
2 days, but yeah. Right down the other side. Yeah. What happens, folks, so the probability when that happens is that you're going to go back, number one, You can, on a short-term basis, you can say you go back to the bottom. But when you have a failure like that, you're going back to the August lows of 2011.
Yeah, absolutely. Yeah, what it's doing, it's just like our markets have set up on the longer-term basis a huge A to B equals CD.
Yeah.
Well, really, the DAX, in essence, has done the same thing because, the way I take a look at it is now, when you take a look at this A, B, C, D, if you're watching on Tiger TV, folks, the D point on this now, for me, becomes the B point. It becomes, the A to B all the way down here. And that's a huge move. And so if we just simply take a look at that being the potential move, if in fact the high was July 5th or what have you,
right.
The 1 to 1.272 all the way back to the lows,
right,
to the September lows. So just even from your standpoint, saying you're looking at this and saying, hey, that's what it sets up.
Yes.
Then you can go paint in the ABCD.
Yeah,
and it sets it up,
big
boom,
time.
right there.
Big time.
So longer term, and that all makes sense because now, that's where. So if you put that together, that says, okay, the euro's going to par,
right,
which is what that stock chart, the longer term stock chart, has said. The dollar's going, to the moon,
right.
Just going to continue to get stronger,
right.
So all those things actually. So the stock charts, as you put the pieces of the puzzle together, they're all coming together.
No,
it doesn't happen all overnight. The things that do happen overnight is that, when you do start seeing the markdown, that's when, if you start going to, the IBD stocks, the cult, the momentum type stocks that are out there, which during a trending market to the upside, great stocks to be in.
Right.
Got to be real careful from a stop standpoint. And the reason is, folks, is because the markdown happens just like that. And it doesn't let you out. And if you don't have stops in place, what you've all of a sudden done is you're going to subjectively sit there and say, well, shoot, do I get out or do I stay in? An indecision absolutely leads to catastrophe.
You
can't have indecision.
You know what's so cool, too? Many of you may have heard when Bill and I did a show with Bill, I did a few of them and produced a few shows.
Yeah.
One of the shows, I specifically asked him about, and now at that point, it was the IBD 100, folks, okay?
Right.
So I had him walk me through what you do with the 100. I had him walk me through everything. Now, this was really cool, because what ended up happening, I asked him out of the portfolio.
Yeah.
And picture, this is about the third or fourth time that this is about the third time I had him on, okay? And so I said, okay, how much in your portfolio would you have of that, right?
Yes.
You know what he said to me? He said no more than 10 to 15%.
Yeah.
And it was so cool. And because this would end up happening. He was explaining exactly what you just did. He says, listen, these are great. And he says, you want them. And he says, what I keep doing is you keep culling them down.
Yeah.
He says, but when they go, they go. So what ended up happening, so this is pretty funny, though. What ended up happening is that, there was other, management at IBD like, no, he didn't mean that. I said, no, he absolutely meant that.
Of course he did.
Okay?
Yeah, of course he did.
And that was the deal. So what he was saying is that you take that and you keep culling them down and culling them down.
Yeah. Yeah.
But I really learned something that day in a big way. You know what I mean? And that's what it is, folks. What it is that you don't load the whole ball of wax.
You can't have your whole portfolio in those stocks.
Just, you bring them down to, you keep getting the winners. That's what he was really saying.
Yeah.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, we appreciate you being out here, folks. You stay right there. We'll come right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow right now down 26. NASDAQ's off 1. You get the S&P's up 2. And, over in England, of course, you get the Diamond got canned from Barclays. You get the LIBOR deal.
And he walked away from $20 million.
I know.
That must have been so that they wouldn't get attacked for everything else they took out.
That's intense. That's right. That's right. And you know what you're going to see, folks, okay? If you didn't see it today, Sheila Baird, who was in charge of the FDIC, was on CNBC this morning. And, you know, she's a straight shooter in a big way.
Yeah.
And even before we were imploding, she was continually saying these banks needed more money. Our banks needed more money. And, of course, the politicians wouldn't buy it. Well, she was out here this morning, and it was really wild. She's saying, listen, you know, the banks in Europe need FDIC insurance, and it's amazing that we haven't had a run on those banks. Okay, the R word, that's how she put it.
Yes.
But then she brought up that, you know, the LIBOR deal is absolutely huge.
Yeah.
And you know, she brought up this point that we knew that, you know, they were fudging it.
Yes.
Okay?
Yeah.
So
everybody knew.
Yeah,
right?
everyone
so
knew, including the regulators.
Yeah.
So Sorkin had a great question for her because he said, well, listen, you know, if in fact, you know, it's a wink and a nod and a fudge,
yes.
You know, what does the bank do on the other side? The bottom line is that it doesn't matter because what she said, what matters is that it's illegal. if they're actually price fixing. There's one thing of the aspect that you're lowball. There's another thing that they're price fixing. And now they know that's what they were doing, is price fixing.
Yes.
Now, price fixing in the United States, folks, you go to jail. It's a jailable offense. It's a felony.
Unless you're the Fed.
Well, this is what gets cool. So check this out. What happened, let's see, what day's today? Today's Wednesday. So Friday, one of the congressmen sent a letter to the New York Fed.
Yes.
Let me tell you something, folks. The New York Fed responded immediately back to Congress that, we know what's happening. This is only the beginning of this scandal. Because the New York Fed, I'm sure, is so flipped out right now. And Guyton has got to be flipped out because he was in charge. He was in the New York Fed then.
Okay.
And because if it ends up coming out that they knew what was going on, when in fact everything is tied to the LIBOR rate.
Right.
That is the biggest scandal in the world, because you have regulators that are supposed to protect you, but in fact they're doing the wink and the nod, and and it's gonna be what financial shock is going to throw the other shark under the table. Yeah. And then what it does,
that's how you always called it.
It is.
The sharks start eating the sharks. All of a sudden.
It absolutely is. And then what you're going to have is that you're going to have these banks on the line for billions and billions and billions and billions and billions and billions and billions.
Trillions.
Because I suspect, it's hard to qualify what the number is, but meaning that how many of us are tied to the LIBOR rate. But I'm sure there's quite a bit of us,
Yeah.
Let's get a Mike. Hey, Mike, what's going on?
Hey, pretty good. How you doing, Tom?
I'm doing great, man. Where are you from?
Clearwater.
Oh, Clearwater. I don't know, something happened there. That's a beautiful thing, man.
Yeah.
Beautiful out today, isn't it?
Oh, yeah. Nice day.
So you want to look at Gold Corp, right?
Yeah, I put the wrong stop order in, and I did not get stopped out this morning. So I'm wondering whether I should just sell it now at market or whatever.
Yes, you should. Let's take a look at it. You get Gold Corp, folks. Okay, this is what's going on with Gold Corp. Gold Corp's down 10% today. It's down $3.32. You get 5.1 million shares. You get a gap away. They came out. So this is with the news inside it. Okay, Gold Corp came out with their numbers, right? Their forecast is being cut, and the reduction of 2012. They're reducing it. They're cutting it by 7%. Now that's not the big deal. The 7% cut. What is the big deal is this: when you gap away and volume comes up, this is going to basically go after the low of 32, and it very well could gap away again, man. There can be something else there that we don't know about, man.
Mm-hmm. All right.
Don't mess with it, man.
All right.
Okay. Have a great one. Have a safe one.
Yeah, pretty big volume today. Hour into trading, it's already done 5 million shares, and the swing point itself only has 7 million shares. So, volume-wise, it's going to be big.
It's going to take it out. Now, if we bring it back, if you bring Gold Corp back, it's like, okay, this chart didn't look bad, but bottom line, it's going to go after the 32, and if it gaps away like it did this morning on the 32, well, you know what's happening is that it's in big-time rough shape. Because what you do have, and this equity right here, folks, is real possible that it may give us an extraordinary heads up that the 825 is on the agenda right now. And this is why. It has a high volume low of $13.84.
Yes,
and let me tell you something. If Gold Corp's going to $13, we're going to $8.25. Sick. But bottom line, you got to pay attention to the market. As it's talking, walking, and squawking.
I love it.
Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We're coming right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
That's interesting.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Don't forget, folks, at TFNN, Monday through Friday, Steve kicks us off 9 a.m. Eastern Time. We go from 9 to 6. Great lineup for you. And, of course, you can get all the programming live at TFNN. If you have any type of cell phone, you can just go to tfnn.mobi, and then once you're up and running, just come over to TFNN and get Tiger TV. Just take the URL, put it right on Tiger TV, and you can actually get the video right on it too.
Yeah, great lineup today. Man,
huge. So today, so check it out. So when we finish, we're going to go up to Newton, Massachusetts. Basil Chapman, 11 to 12. Tucson, Arizona. Larry Pesavento, 12 to 1. Daryl Martin, he has Diagnostic Hour. It's a new show, 1 to 2. That's Dallas, Texas. Coming back here, David White, 2 to 3. Out to California, Ken Shreve, 3 to 4. And then back here, 4 to 6. And you know what we're going to get, folks? I think we need some horses. We need some horses because we have Kate Stalter. She's out in Santa Fe.
That's right.
So we got all these Western dudes. It's a beautiful thing.
Dudettes. Dudes and dudettes.
Dudes and dudettes. That's right, man. I like that.
I tell you, it is great. This is truly now a television channel.
I know. It is, which is a beautiful thing. I was watching us yesterday.
I love it. We got to get more of those televisions out. Got to get
and it's all live. That's right. Oh, listen to this, folks. If you haven't seen, HBO has a new series, right?
Okay.
The Newsroom.
I haven't seen it.
Oh, folks, go check it out.
Okay.
It is dynamite.
Really?
Okay. Yeah, it is. I watched it last night for the first time.
Okay.
They already have 3 episodes under the belt. I didn't see the first one because Angie watched it the night before, but I watched the last 2.
Yeah.
It's good. What it's about is it's about a newsman, the second largest anchor in the United States. This is the
setup.
The setup.
Yeah.
And he does an apology on the air saying that the news have been giving you a bunch of BS for all the years and just what drives people, what drives ratings.
Yeah.
And he says we're going to try to deliver real news. Like the Huntley Brinkley, years ago,
sure.
Depending how old you are, folks, that used to be just facts versus, opinions on a continual basis.
Yeah.
So it's really cool. I think it's cool anyway, because I like the idea. And the guy that's doing it is really talented. He used to be, I'm still talking actor-wise. And they have him lined up as like an attorney asking all these people questions.
Okay.
Right? So I like the concept.
Okay, cool.
I definitely like the concept.
Think how things have changed. Go back to, 30, 35, 40 years ago, Walter Kahn, there was like one man.
Yes.
That basically was given,
That's right. Yeah.
the news to everybody.
Right. And now
Not that Huntley and Brinkley, we had a couple of guys out
Oh,
there.
yeah, no, for sure.
Yeah,
For sure.
Pretty wild.
It is wild, man, no doubt.
Today you get your news, your stock market news right here, folks.
Yeah, it is. Hey, it's real.
What the markets are doing.
It's live. It's 45 hours a week. 45 hours a week, man.
How about that?
When I think about this, it's amazing, folks. I guess, it does take a long time to build companies, though, when I think about it.
Yeah.
Because I started in 1994 and 3 hours a week.
Yeah.
3 hours. So now
you're
45. That's pretty good.
That is good.
Let's go to Dave in Jupiter, Florida. Hey, Dave, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Another beautiful day. They're all beautiful in Florida.
That's a beautiful thing. I know. We're so lucky, man. I mean, we really are. It's amazing.
Well, you consider the heat that's gone on around the country, and actually the cool spots, especially in the evening, is Florida.
Folks,
it's in the 70s.
You just wouldn't believe, the weather that we've had this year, right? As Steve just said, right? When the sun goes down, so what happens in Florida is this, folks, okay? The sun is hot, okay, because we're close to the equator.
Absolutely.
When the sun goes down, normally in a summer heat, you only get 5 degrees less.
Yeah.
We're getting about 7 to 8 degrees less, maybe 10.
Yeah, especially the closer you are to the water.
Last night, exactly. I'm outside last night. I'm saying to myself, this is beautiful. I can tell you how cool it gets. So, Angie and I get a beautiful German Shepherd. He's not 2 yet. Right? But what ends up happening, of course, dogs get hot. He's outside having a blast all day. But bottom line is that they get a little bit slower.
Yeah.
Well, Colin and his friends come in, and they're all out in the pool having a good time and all that, right? And all of a sudden, I hear Harley, right? He starts, right? And what ended up happening, it cooled down, folks, like about 8:30 last night, right?
Yeah, yes.
Well, you talk about a puppy. Oh, man. They had everything they could do to handle him, right? He started running around. He's looking at them. He's saying, okay, come on, we got to play. And when he wants to play, folks, his playing is a little bit different. So it was so funny. So I at 4 o'clock this morning, right, it was like, okay, you got to get up, man. I want to play again. I was looking, I says, it must be really cool out. I get up. Sure enough. It was so cool out. It was amazing.
That's
wild.
That's great.
What are we going to look at, brother?
Well, I'm in GDX, and I'm looking for a stop area.
So let's take a look. We got GDX. GDX is the gold miners, the market vectors gold miners ETF. Inside of this baby, you have, if I remember correctly, so Barrick is 15% of it. And Gold Corp is 12. See, that's a problem, because Barrick has always been kind of a dog. Now, Gold Corp gapped down today. So you get 15, 27, 37%, and then Newmont's next. Okay, so, but stop-wise, let's look at it. What you have is this. You're coming down today, you get 4 million shares. Yesterday we had 14, and you're coming into 30. Well, coming into 30 is good. That's what it comes down to there. So now let's see if we can take the swing point out. There's a swing point there with volume. It's going to be okay. So, Dave, there's a swing point low on the 28th, right, of 42.60.
Mm-hmm.
And, if you take that out with volume today, man,
it looks like it is.
Yeah,
with the volume you've had the first hour and 10 minutes of trading,
right.
Looks like that's a pretty good probability.
Right, 48, 42, that's 6. Yeah, that would mean I would not stay in it. If it takes us out at the end of the day, why stay in it? Because it doesn't say it's going to the swing point of 39.
Yeah, the reason I didn't let it go this morning is I thought there might be an outside chance that in the statement today there would be some money printing blab, and the gold stocks might get a lift, or gold might get a lift.
Yeah, and you very well could be right about that. The way I would do it right now, I'd put an intraday stop in it and forget it. You know what I'm saying? Because the risk of another 5% down is not worth it.
Yeah.
And we will have that volatility at 2 o'clock. That volatility is going to be out there. And I can tell you, I still don't see the Fed coming out, saying they're going to print. And just not at this point. The reason I don't is that they've laid it out so clear. I mean, what you can do is this, folks. You can go over to the Federal Reserve. They have these white papers, okay? And you can read the whole white paper. That's their plan.
Right.
It's laid out exactly what they want to do. It's, and they're going to keep rates low to, 2014. And that's how they're going to handle this thing. And I'm sure they're elated at this point that the dollar is staying strong. They're not going to tell you and I that, but they cannot be accused of basically trashing the dollar.
Well, you can't go to the U.S. dollar chart index, and you can see it's well off of the lows.
Yeah, huge.
I mean, it's
huge,
big time off of the lows out
huge.
there. But I think what you've got to look at, Dave, is the average true range over the last 10 days on the GDX is $1.21. This thing opened up. The high was 42.55. So far, the low is 41.86. So, it's going to travel today at least $1.21 from that high to low. Hasn't done that just yet. But what Tom was talking about is, he was looking at May 17th, which has 30 million shares, and the high on that's 41.97. Hasn't made it down there just yet. No, it has, actually. We got to 41.86.
Yeah, slightly under it.
Yeah, but the problem is, here's your problem, is that even if it rejects that, if let's say it closes into that area, even if it rejects it just a little bit, you're still going to be below the swing point from June 28th,
right.
And likely with volume. So, I like Tom was saying, I think I'd have an intraday stop in there in case it totally gives way. But I think you're still going to have another decision to make, even if you don't get stopped out come the end of the trading session.
Yeah.
And if you do have volume that exceeds the swing point on June 28th, you're probably better off just to take your money off the table and get back in when you get some other confirming signal.
You know what? Absolutely. You know why, too? I just pulled up Barrick Gold. Barrick Gold's breaking its bottoms, and it's going to have volume. And Barrick is the biggest one in there. Look, Barrick just broke the 34.86. You're at 34.65. You're at 3.6 million. It's got to do 11.1. And that's the largest weighting inside the GDX.
Not good.
No, it's not.
All right.
And in
so
fact,
the intraday stop should be under the low, under 41.86, under there somewhere.
Yeah, I give it nothing. Right? Why give it anything?
Yeah. Nope, that makes perfect sense.
Hey, what's really wild here, folks? Okay, this is going to be pretty sick, actually, because picture Barrick Gold, which is the largest gold company in the world, has just gone from 55 to 34. Now it broke the swing point on the weekly, and we have 56 million. Let me just see something, because if this is the case, then
you're going to change your opinion.
Yeah, I am.
Yeah.
What I'm going to change my opinion to is that the game is on right now at 8.25. If that's the case, because what happens every single time that you get huge downdrafts, folks, these commodities always started.
Yeah.
So at 6.13.18, there'll be. Let's figure. What I'm trying to do right now, folks, I want to get the correlation of is it going to break it with volume on the weekly. So 18 million. Okay, it won't break it with volume. It shouldn't. So it can break it with price, but it would have to do more than 56 million. But bottom line, it's a dog, And if we go over to Newmont, let's just look at Newmont. So in between those, Newmont's not bad. Yeah, but just keep it tight, man.
All right. Well, listen, thanks for your help. Appreciate it.
Okay, have a great one. Have a safe one.
Bye.
Yeah. You know, boy.
And I'm talking about the S&P at 825, not gold at 825. I got...
no, gold is...
How does Angie not know my 825? Angie, I can't believe that. Angie's... she's out there growling and prowling.
You got the T-shirts and the golf caps are already printed up.
I got to get them. I'm telling you, no doubt about it, man. Let's go take a look at some of these large caps and see what we have. IBM, that's not bad. It's only down 12 cents. You get Caterpillar off 45. Disney is down 4. Coke's off 45. Oh, DuPont. They're hitting the industrials. You know, hit Cummins. Oh, there she is. Okay, so here's another one taking a swing point out with volume. Okay, this is another ABC down. A point is 53. The 53 is going back to April. B point is 46. So you got what? 47 brings you to 43. You're at 46 right now. See, Cummins started this baby yesterday.
Yes, it did.
Yeah.
I didn't even take a look at the chart on Cummins. But they had a ton of volume come out of it yesterday, didn't they?
Huge, man. Huge. But
look at that.
You talk about blowing a B point away, folks. This blew, we did volume of 12 million shares. Last 1.8 was the B point, volume-wise. $88.31. That sliced it and diced it like one of those beautiful... It's a huge ABC, too. Yeah. Now, what should happen is that it looks like on a longer-term basis we'd have to, build some more cars in order to croak the 79, But what's sticking out here again is if it does that, well, then a lot lower prices in store here. Yeah, no doubt.
Interesting.
Yeah, it is. It absolutely is. Oh, hey, did you hear? Listen to this. This is pretty amazing. Steve Wozniak, right?
Yeah.
So picture this, folks, okay? If you haven't heard Nico DeHaan show, Nico has a health show, Health Signals. He's on noontime on Fridays, okay? You want to listen to the show. Nico knows so much about how to keep your body in shape and keep your mind in shape because your body can be in shape. It's amazing.
For sure.
And I've worked, he's a personal trainer. I've worked out with him, I think, almost 8 years now, okay?
Yes.
So watch what happened. So living a primal lifestyle. Sorry, thanks, Al. That's the name of the show. So picture it, folks. When Angie and I took her sailing, and sailing is work, and so I was working for 2 weeks. And what happened is that in the back of my knee, right, it started getting really tight. I says, man, this is a trip. Do you know what I mean? And what I love about sailing is that it's a vacation, but you're working. So I'm having fun and working at the same time.
Sure.
But when I came back, it was the first time that I said, wow, I wonder what's really wrong with my knee, right? And I said, well, I'm not going to do anything until, I go see Nico.
Yeah.
So sure enough, I see him yesterday, okay? And he gets me straightened out in all of 48 hours.
Really?
Yeah. Okay,
gotta love
and he knew exactly what it was.
Yeah.
And he said to me, he says, so when I'm going from the deck down below, right?
Yeah.
It was steep, and so I was using the same muscle all the time. And of course, when you're out there with the waves, I know how to stand out there. You have to go back and forth. Okay.
Yeah.
So, bottom line is that he got me fixed up in 2 days, and I'm feeling so much better.
That's good.
It's absolutely insane. Okay. In that context, folks. Listen to the program, okay? Because it's just amazing, that you can do something like that. And I said to him this morning, I said, it's amazing that if you really understand what your body does, you don't have to go to the doctors.
Yeah.
I mean, and believe me, I never go to the doctors, but I was absolutely going to get this checked.
Yes.
And now,
okay.
Because it was hurting, I hardly could walk.
Yeah.
Do you know what I mean? Amazing. Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us, folks. Dow right now is off 51, Nasdaq's off 10, S&Ps are off 2. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We have the Dow right now down 51, NASDAQ off 12, S&P's off $1.50. So I was talking about Nico, and the main reason I was talking about him, not that he was fixed my knee, folks, okay, is that Nico absolutely is an Apple freak. I'm saying this in a good way, okay? But everything's Apple. He knows, he understands everything upside down. And he says to me on Tuesday, he says, the that new Microsoft tablet coming out.
Yeah.
He says, it's just absolutely beautiful. And I look at him. I says, hold it. I says, you better go to confession. I says, you got a sacrilege going on here, right? And so he says, I'm telling you. He says, they really know what they're doing, right? I says, wow, this is really weird, right? And I says, okay, I can't wait to see it, right? Well, that's 2 days ago. Yesterday, do you know what Steve Wozniak said? So Steve Wozniak, folks, founded Apple with Steve Jobs.
Yes.
Steve Wozniak turned around and said about the tablet that he thinks that Steve Jobs got reincarnated and he's at Microsoft now.
Oh, did he really?
Yeah.
That's funny. I saw him on this.
Can you imagine this? He's at reincarnated and he's at Microsoft. Bill Gates must be like kissing Steve Jobs. I mean, that's an amazing statement.
Wow.
Yeah, I know. Isn't that intense?
Yeah,
so,
I saw him. I don't know if it was the same thing, but I saw him on television. I just had music playing, so I wasn't paying attention to know what he was talking about. But that's interesting.
That's heavy. That's going to sell whatever this is. I want to see what these things look like.
Well, David, while you were gone in one of the Friday shows, might have been the first Friday that you left. David and I were, on the Friday show doing this show, and I think we were taking a look at the Microsoft pad. Now, what was actually cool about it was, it had this little the cover that you've got.
Yes.
Close your iPad.
Right.
As that cover comes down, it turns into a keyboard.
Yeah, see. Right.
Which is really nice and really easy.
That's what he was. What Wozniak was talking about, and Nico was talking about, is that they said the design is extraordinary.
Yeah.
There goes Microsoft again. See, the thing with Microsoft, folks, which is amazing, is that they have always had so much money. It takes them longer to do everything, and then all of a sudden, when they do it, get out of the way.
Yeah, yeah.
Because they just don't stop. You know what I mean? If it's taken them that long, well,
hey, talk about not stopping. We haven't looked at in a long time.
Oh,
Walmart.
Yeah.
Now that thing is up over the highs, isn't it?
I believe.
Go back and take a look at put on the monthly. Let me see.
I think it's right at. I think 72 is the number.
No, it's
right?
up over it. Yeah. So the number was 70.25. I showed.
That's right.
And it's up over
it's 72.
Been in a consolidation in forever, but it's now busting out.
Okay, so let's see. Let's do this. I bring this back to 99. What I'm going to do here, folks, 19. I'll do 98. And put it on a monthly, because what we want to see is does it have juice? Okay, so let me see. It's too bad. Probably 2002. I need...
Well, so I show the volume December 31st, 1999 being 137 billion.
Okay.
I believe is what that number is. 137
million. Probably,
okay,
yeah.
137 million. 137 million. Yeah, not billion.
Right.
And coming into it last month was coming in with 229 million. So now it's up over right now. It's got 64.
Right.
But we have quite a ways to go in the month out here.
Okay, so now the way this works, folks, is this: if it closes out the month at 70.25, well, that's a heads up. That would be bullish for the market, for all the market, because that would be consolidation for that amount of time, and that would be bullish.
Yeah.
You close underneath it, and what does it do?
Yeah,
well,
you know what, folks?
Can't bust it up. Let's say that we'll go all the way back down to 43. So that's going to be a big heads up for us. There's no two ways about it. Huge heads up.
Yeah. Now, if you take a look at something like this, how would you? We'll do it tomorrow.
It's a beautiful thing.
We'll do it tomorrow.
You stay right there, folks. We get Basil Chapman coming up next, 11 to 12. Then, of course, Larry Pesavento, Darryl Martin, David White, Ken Shreve, and myself back here.
Have a great day,
Steve Rhodes,
folks.
Tom O'Brien. We appreciate you being out there.